What's up? Tim Sykes here with the man, Huddy.
Hey, how's it going?
Huddy is one of my newest students to pass over $200,000 in profits. He just graduated college, and yet he can still somehow grow more hair than I can in my entire life. What is this? You shaved like 2 days ago and you have this.
No.
I'm just kidding. So we're going to do a Q&A. We're trying to give a live challenge webinar. The Wi-Fi here is not great. Just before we begin, let me just show you where we are, because Huddy from this spot just made about $3,000. Was it $3,000?
$3,000.
2,900 on the day. I made about 400. Oh my God, it's so bright. Let me just show you this. We're here in Santorini. It's pretty cool. I just wanted to show you that so that you can understand that you literally can work from anywhere. It doesn't just have to be, like a little dark bedroom or anything. This suite, by the way, is about $3,000 a night. So you made basically what this cost, which is cool. Leave questions in the comments below. We're going to be answering a lot of your questions. Thank you for leaving them. And I'll do a follow-up video with more questions, because hopefully you take these videos and you start to say, wait a minute, let me think, let me expand on them a little bit. Before we begin, give a little background on your journey so far.
So I started stock trading when I was a sophomore in college. I found Tim Sykes, and while I was going through school, for 2-3 years, I studied, I practiced, I put in all the work, and by the time I graduated, I made $100,000. That was a year ago, and throughout the next year, I was meeting other students of Tim Sykes's, like Tim Brittany and et cetera, and they kind of got my game to the next level, and ever since, it's been making $100,000 over the next year and traveling, and every week I'm almost in another city. I'm just putting myself where the opportunity is and living the best life I can. It's really fucking sick.
That's awesome, first of all. Second of all, explain just a little bit about the struggling before you made your first $100,000, because it wasn't just like, oh, you started and then you made $100,000. Explain,
No
what was
way.
it, a year and a half of nothingness?
It was 2 years of one step forward, 1.5 step back.
2 years.
A lot of perseverance. I had to really push through and refine and reflect. And what was it about my personality? I had to learn how to not lose in order to start to begin to learn how to win. And it took me so long to do that.
Sorry, that was an amazing, say that again?
You have to learn how to not lose money first so that you can begin to learn how to win. And do you hear that? You have to learn how to begin.
It just sounds so eloquent when you say it. That's the biggest thing. Like, a lot of people go into this thinking, like, how much money can I make? How quickly can I make it? But you forget, and you don't think about the downside. You don't think about the risks. You don't think about the losses. You don't think about the times when, frankly, you shouldn't be trading. Like, have you learned patience now over the past few years?
I've learned not to trade. I've learned to probably step away from the laptop and not start looking for random opportunity when it's not there. It's not about feeding your ego. I think at the beginning, a lot of people have to feed their ego. It's like, I got to find this opportunity and then I have to be right. And that's not how the stock market works. You got to find something consistent and then trade the shit out of that until you're consistent with one thing. I switched up a Bruce Lee quote at one point, and it was, I fear not the man that's traded 10,000 setups, but the man that's traded one setup 10,000 times.
I have this tweet. This is a tweet that is planned for tomorrow. Have you been looking at my tweets?
No.
I planned some tweets ahead of time. That's awesome. All right, so we're going to get to your questions. I guess this one's for me. When you talk about Tim Brittany and him studying his ass off to get today to where he is today, you talk about how he studied stock charts constantly. Can you explain or try to explain this process of going through charts and what us newbies need to be looking for? Actually, you can take that. What should newbies be looking for in charts? And what does it mean to study thousands of charts?
It's familiarity, something that you can come to the market and you don't get nervous. You don't know what's going to happen. It's not a 50-50 crapshoot. It's something you've seen 8 out of 10 times it works. You're putting yourself in a position where it's hard to take the loss in the first place, and you need to be familiar with what that looks like.
Well answered. And I would agree that you need to know what the pattern looks like and to have the practice. But also at the same time, it really helps to understand the why. Why did this chart work? Why did this catalyst work? Because the catalyst will change over time. The setups will change a little bit. The sectors will change. But the cool thing is it's very similar. This is not rocket science. If the shipping sector is spiking big, it's very similar to like when police equipment stocks were spiking big, or Ebola, or CBD, or marijuana, or China, or low float. Very similar kinds of charts. And that's the biggest thing. Like, even if you don't necessarily practice on the charts, if you didn't necessarily trade it, be aware of it and recognize it. Like, learn the history. We're basically glorified history teachers. What are your favorite trades? What are some recent tickers you've had success with? And your first tickers that you've had success with, long or short biased? It's a lot of questions.
I personally, for a beginner, I love the OTC market. When that market gets hot, it's really good to learn on. The price action's a lot cleaner, and you can go from there. You learn how to buy stocks and let them run, or short stocks and let them fall apart, and it's much more manageable. From there, my favorite setup is overextended gap down. It's one of Tim Brittani's most famous, and it's just one of those high odd winning percentages where you're really not going to take losses as long as you're focusing where you need to be focusing. Last but not least, like he was just saying about a good why, it's not just candlestick patterns. It's really not. The further you develop your career and the further you refine, you realize that there are reasons that these things are happening, and you have to find the reasons why it's going to go down or it's going to go up. What is a good catalyst? What is dilution? What is overhead supply?
Early in the morning, or when the market is approaching the close, which do you prefer to trade?
Early in the morning. I feel like if a stock's going to be backside, if it's going to be hit with downward selling pressure, it's going to start from the morning and go down. If it's going to, I don't like hitting at the end of the day and figuring out what's going to happen in the last hour.
This is from N. Burton. This is from Beach Gal. How come when there's a big wall of sellers, yet the stock still goes up? And are the ask prices too high and not going up? How come there is a big wall of sellers, yet the stock still goes up? Let's answer that first.
Because there's more buying than selling.
No wall is secure, okay? We learned that from Game of Thrones. Berlin. It doesn't matter. Berlin, there's no wall is truly secure, and this goes with the stock market too. If there's a ton of buyers, if there's a catalyst, if there's news, if it's the right setup, even big sellers can get taken out. You just have to be aware of the big wall, because it doesn't, it might prevent a clean breakout. It might take a while.
And it really comes down to supply and demand. If the demand overwhelms the supply, it's eventually going to get broken down. If the supply overwhelms the demand, it's going to go down.
What is your morning trading routine? I find myself not knowing what to do with all the movers.
Like just the scanning part, or would I actually do it 4 a.m. to 6 a.m.?
What are you doing? How do you, let's say you see 5 movers, what do you do? How do you narrow it down? How do you choose which ones to trade?
I choose in order of, for me personally, at this point in my career, I'd like stocks that are liquid, that have present dilution. So the first thing I do is open up my scanner. Preferably I have a stock to trade from the night before. I'm not going to short a stock that's on its first green day, but its second day I'm really interested, especially if it extended itself. So I did the research for the stock the night before, and I have a plan for the next day for that stock that's already run. If there are new stocks on my watch list that are popping up on my scanner, I go through the filings. I want to find a good reason why to short this thing, or to at least watch it for the next 3 days. And for the first hour, 5:30 to 6:30, I'm going through the filings. If I have a good stock to short, I'll reserve shares to short, and I'll make plans, and then those plans will progress as the day goes on.
6 months into the challenge, you suggest paper trading or just very small size till I learn risk management?
Very small size. Paper trading kind of takes out all the emotion of fear of losing and what it's like to take profits too soon, or whatever it is. So you just got to get used to the real thing.
And just to counter that, I think that you should be paper trading in the beginning. When you're first starting, just to get used to how fast these stocks move, the patterns. Obviously, you're not necessarily risking money, so it's not a full education, but it is a partial education. And a lot of people are just petrified of losing any money. So paper trading. And there's no one right answer for everybody. You can try small positions, then if you get too scared, go back to paper trading. You can try paper trading, and then if you're too bored, you start taking small positions. You got to learn to adapt. This is not an exact science.
And what I would say is, if you are paper trading, take it seriously. Like I tried paper trading one day, and I had $100,000 of paper money, and TVIX was running, which is not something that we trade at all. And I bought an absurd amount of shares and I made like $12,000 in a day, and I was like, wow, and I felt good about it. But that's not realistic. That's not practical.
It's also, there's different ways to make money, different patterns. Some patterns you might make money paper trading, or you might make money 1 time or 2 times out of 10. That's not a consistent strategy. That's not going to make you rich in the long run. No one trade matters. You got to figure out a process that you can repeat again and again and again. This guy's $250,000 in profits. How many patterns do you think you could break it up? Like if you were to categorize all your trades?
3 or 4.
So for those of you guys like messaging me like, oh, I'm trading 20 patterns, that's too much.
Yeah, I mean, find something that you can focus on, and something that works. I mean, Tim Sykes comes to the market every day and says he's looking for a morning dip buy pattern. That's his favorite pattern. And that's 90% of his trades since, for the past year. So you got to find a place where to focus, and then when you don't see the pattern, you can't start deviating and focusing on all the other stuff and confusing yourself with what is right and what isn't.
There's a thing called analysis paralysis, where you're looking at everything and you're like, what should I do? What should I do? What should I do? And then you do nothing because it's confusing. If you keep it simple, 1, 2, 3, 4 patterns, try those and see how you do. Let's see. Tom Gunnarsson says, would you go over your studying process in detail? I.e., what's your typical day studying like in the beginning, then moving forward? Were you watching video lessons, DVDs? Were you researching news? Were you using spreadsheets? Details.
First, I watched all of the DVDs in the penny stocking course. Just went through, I forget, it was 5 years ago, but I watched what you sent out when you first joined the challenge.
Good.
2 years in, I realized that I still wasn't profitable, and that's when I started really racking my brain, and I had to figure out, okay, what is it? And at that point, I looked at my profit sheet, and it said I had made money shorting and a good amount of money, and I had lost money longing. So I changed my focus, and I started focusing on Tim Grittani, and I started focusing on trading the tickers. And so I rewatched Trading the Tickers at that point, just to get it more refined in my head. And then the next part was really crucial. I started seeing some similarities in the OTC short setup and the overextended gap downs. So what I would do is when I have the plan when the night before I'd have the plan for the next day, that night before, I would rewatch the chapter that was overextended gap down or OTC short setup. I would refresh it in my mind. So I've watched Trading the Tickers maybe 17, 18 times. Not all the way through, but when it was really applicable. And that still wasn't enough. So then I went and bookmarked all of Grittani's webinars. And I started watching all of Grittani's webinars, and I started categorizing them, which patterns were in which webinar. And again, if I had seen something similar that wasn't exactly from the DVD, but he did it in the webinar, I would rewatch that little section the night before so that the next day I was really prepared. I knew exactly what to look for, what to see, and when to strike. And that was huge.
So a lot of you guys just watch a video lesson or a DVD once and you're like, yeah, got through it. But you're not really paying attention. You're kind of half-assing it. You just want to get through it so that you could say, I get through it. Look, I watched all the video lessons. I watched all the DVDs. Rewatch this stuff. Try to actually learn the lessons that are in these things. It's not enough just to watch them all. People are like, how many hours should I put in? And they're like, not really paying attention, but they're like, yeah, I'm putting in the hours, Tim, but you're not. Like, you gotta watch this stuff. You gotta learn it. And people sometimes learn after watching it once, twice, 3 times. Then you see another play come up. Maybe it's confusing in the beginning, but then you see a play and you're like, oh shit, chapter 3, I remember it. So you go rewatch it. Yep. You have access to all this stuff especially you challenge students. You have so many archived webinars from me, Tim Grittani, Tim Lento, Michael Good, Mark Crook. It's insane how little you guys are actually going back through the archives because you just want hot new picks. Everything's hidden in the archives.
I would say become absolutely obsessed. He's so right. There are so many little things that it took me 15 times of watching the same video to finally pick up on. For example, I think his Grittani's shorting bounce plays, right? It took me 10 times of watching that to realize that he kept saying right in the beginning that it's only on red days. So there were stocks that were greens, and stocks that were green on the day, and I'm trying to short bounce up towards the highs. And in that DVD, the very beginning, it says only red days. And it took me a really long time to realize that very big stipulation.
Question from D22, who's one of my most dedicated students. Keep up the good work, buddy. I asked him in a webinar what his edge was. He said constantly adapting to the changing markets and changing opportunities. Don't just focus on the market. The average millionaire has 7 streams of income. Huddy, what would you consider your main edge?
Dilution. Dilution, and specifically stocks that are red on the day. Like I said, I like waiting for stocks that are on the backside. I want, buyers to actually give up, and I want, there to be another side of overhead supply is what I would call it. I want it to really tip the scales. If there's one buyer, I want 3 sellers. And you're not going to get that necessarily in retail, but if the stock is red on the day after a massive move, that one buyer is now a seller. And then if I can find some dilution, now there's 2 sellers. And if I can find some other reasons that maybe a ton of more shorts want to get involved, now that's 3 sellers and there's barely even one buyer. So that's going to really drive down the stock. That gives me a huge edge.
Miller Ruth says, how long did it take you at the beginning to be able to plan a trade and execute that trade without errors? Do you feel like being able to stick to your trading plan was a big part of your becoming successful?
I mean, that comes down to discipline, and I think that just happens with growth. I definitely still mess up from time to time. I don't follow my plan. I get in too early. I don't wait for certain things to happen. But ideally, you kind of map out the trade, like I said, the night before, and you have an expectation of what you want to see. You have an area of where you want the stock to go. And then when it goes there, you make the move. It's not preemptively getting in because you don't think it's going to get there. You can't have FOMO.
Another thing, trading without errors, that's not possible. You're always going to have errors, and you shouldn't be afraid to make the errors because you should make the errors and then learn from it. If you say, okay, I'm going to trade the same pattern like 10 times, every single time you take profits too quickly, that's an error, but you learn from it. And then the next trade, ideally, you say, okay, the past 10 trades, I took profits too conservatively. Now let me be a little more aggressive. So every trade gives you an opportunity to do better on the next one. It's not about perfection. You're never going to be perfect. Even if somehow you are, once upon a time, like in tune with the pattern or in tune with a hot sector, it's going to be fleeting. And then you're going to lose it. It's like a moving target, okay? And you're trying to get close to the moving target. I think you can say like it's kind of like a bullseye. Like you're not going to hit the bullseye every time, but if you're even around the bullseye, you'll still get paid. You just don't want to be like off, the bullseye map. Question here, really good one. Can you explain your aha moment? Have you had any aha moments, Huddy?
Yeah, I mean, the aha moment was when I rewatched Train the Tickers. I bookmarked all the webinars, and I became obsessed. I used to have all these chicken scratch post-it notes everywhere of reminders of, okay, don't long a stock. Okay, wait for something to have 3 green days and then a red day. Like I made so much notes to help me stay disciplined and help me find what I was familiar with. I really focused, and I started to become more responsible, more mature. It was no longer degenerate gambling. I was sick of just touching things and having a 50-50 chance. So it's when I realized that this is a career. It's no longer a hobby. And I buckled down and I got to work.
And I've had a lot of aha moments from teaching to trading to traveling to life. I'll actually include a video right here. Here's my profit on the day. I made $350 in a few minutes. Where's your thing? 2,900 on the day. All right, let's go eat. It was a good morning of trading. Oh, it's so bright out. My future's so bright, I gotta wear shades. Oh, and we got this. Trade from anywhere, work from anywhere. I got the view. I got my student Huddy. Always recycle. Look at this.
Yes. What do we got here?
In case you're wondering. Oh, that's hot. I don't know. I just ordered like everything. Wow. It said the feta mousse on the side.
I did hear that.
It's okay. That's all Greek to me. Oh, we got the lamb chops.
Love lamb
with the
chops.
view. DM me. Would you like to make money from anywhere? Work from anywhere. Don't use plastic. That's glass. Cheers. We just had a trade where we had room service delivered outside. We're both hungry. We're both in a trade at the market open. The market opens at 4:30 in the afternoon here in Greece, the U.S. stock market. He made about $3,000. I made about $400. And we both kind of just laughed that this is our life, that like this is our job. And like,
surreal.
it's pretty crazy, right?
Yeah.
Like, I was happy. I trade with a small account. I don't care. You know, I'm not like angry. Some of you guys message me like, are you angry your students make more? Like, fuck no. Like, this is, sorry kids. I'm not supposed to swear that much. This is what I want for you. I want you guys crushing my targets. Tim Gritani's over $8 million in profits. Actually today, kind of cool. I just passed $5 million. Interesting little milestone. Thank you. Good stuff. But we've learned to take profits. Like he learned to just lock it in. Could have made like an extra 500. He saw a trade like while we were eating outside. But it's okay. He still made $3,000. I know a lot of people where if they make $3,000 and then they miss like 500, they're angry. They're like, oh, I could have made 3,500. Ah!
Yeah, it's not about that.
And you have to be okay with like sometimes missing out on opportunity. I was telling Huddy the story of my first $100,000 profit. Freshman in college, downloading illegal movies on Merc. Got my fake IDs taken away from me. All my friends are joining fraternities. I'm not even making it into a fraternity because I'm obsessed with stock trading. And I made $100,000 in a freaking day, like more than like lawyers and doctors make like in a year. And I sold too soon. The next day it would have been over $200,000. Was I angry? No, because that was an aha moment for me. How can you tell when a stock is starting to turn down when watching level 2 as opposed to a bounce or looking when to get out?
For me, it's a lot with, it's called the stuff candle. It's when all the volume just kind of surges into an important level. I mean, there's certain levels. It's not really a price point. It's an area where there's going to be supply, and if you expect it to be there, and then it's there, and you see it real time. It's just all this volume rushes in and the stock doesn't budge. And that's a big sign for a lot of longs to get scared, and it's a sign for a lot of short sellers to get in. And so, you know, it's a self-fulfilling prophecy when you see it.
And you have to be careful at key inflection points. Like if a stock fails going from red to green and it can't go green on the day, the shorts are going to pound it back down because now it's failed. If it fails to break the VWAP line, the shorts are going to pound it back down under the VWAP. So you're looking for that momentum. That said though, if a stock is red and let's say it's a heavily shorted stock and it goes from red to green, that can be a catalyst to buy because now it's gotten through the wall. So you have to look at these key levels, and same thing with like support and resistance. Like if a stock can't get above $5 a share, it keeps pounding, keeps pounding, keeps pounding. It's like women on Wall Street, it's a glass ceiling, you can't get through it. And then it gets through it. And then it's 510, 520, off to the races, chat rooms alert at 530, 540, morning spike, hot sector, percentage gain, scanners kick in, 550, 560, 570, holiday trading, maybe light volume, now 580, 590, you sell because you're taking quick profits, safe profit, then it goes 6, 610, 620, then the short sellers chat rooms are like shorted, it's up too much, the short sellers are too early, like always lately, and the newbie shorts start getting squeezed, then it's 640, 650, 660, then the momentum buyers and the greedy dumb motherfuckers and the newbies are buying 680, 697. You want to take profits, you want to lock it in. The shorts are adding, they're trying to average up, and they're getting squeezed. Remember holiday trading in this hypothetical example, now 750, 850, it goes to fucking 12. Shorts are being blown out of the water. The newbies are fucking idiots. And you know, hopefully you're watching this, not chasing, but you're selling along the way. And that's a short squeeze that sometimes happens.
Tell us how you really feel.
That's how I feel. How much capital do you allocate for each trade and how much return? What do you go for?
One of my biggest mistakes in life was trying to trade big. I really, I don't have a set number, but for the most part, I trade really small size and I go for bigger percent gains. And I think first what you want to do before you even think about taking more size is focusing on percent gains and are you making money in the first place? And then once you start making money, you slowly get to a comfortable level where, for me personally, my goal is $2,500 a day.
You're shaking. What's going on here?
I don't know.
Dude, you had too much coffee. All right, continue.
I had too much coffee?
I had too much coffee. We all have too much coffee.
My goal is $2,500 a day.
Tan. I look tan, man.
Me too.
I look healthy for once. All right.
$2,500 a day,
Yeah.
10K a week, 400K a year. And that doesn't happen every day, but that's my general goal. And I don't need to put down $100,000 or anywhere near my net worth right now in order to capitalize $2,500 a day. I mean, 20 grand, 30 grand can do that very easily for me.
Especially in the beginning, I think that you should trade smaller than you think. Like if you think you should open an account with 10,000, open an account with 5,000. You just have to be extra careful in the beginning because you're not used to the volatility, you're not used to the patterns. 90% of traders lose, but in the beginning, it's more like 100% of traders lose. So you have to expect that you're going to lose, And when you're losing, you don't want to lose big. So many people are like, yeah, I want to start trading. I'm into it. I'm going to put in 100 grand. I've had like trust fund babies. They're like, yeah, forget about starting small. I'll open up an account with like 250 grand. And then, they screw up because they think it's too easy. You're going to have problems in the beginning. Tim Grittani, now over $8 million in profits, made nothing for 9 months. And that was during a hot market. He was studying and testing every day, living at home with his parents, so he had like no responsibilities, and he still made nothing. Most valuable lesson in your trading career so far?
Well, let me think about that for a sec. You go first.
For me, my $500,000 loss, for sure, Cygnus E-Transactions. You can read about it in my best-selling book, An American Hedge Fund. Click the link below. I'm going to give you a free copy because I want you to learn from it. I invested way too big because I fell in love with the product. I fell in love with the technology. There was no way for me to cut my position because it was an illiquid stock. So I made a lot of classic mistakes, and it sucked. But in time, it made me a better trader, better teacher, better human because it made me more conservative.
So in terms of most valuable, like everything we've been talking about, I've been giving a lot of just lessons that I've learned that I value wholeheartedly. So definitely rewatch this video, but in terms of what do I value the most and using the actual word of value, it's what I just told you about size. You don't need to use a lot of size to make a lot of money. Once you start risking a lot of your account size, you are gonna blow up a big portion eventually, just like Sykes did with $500,000 he was just talking about. That is very valuable. You don't need to bet the house when you think you have an A+ setup. It's just not necessary. And it only puts you in a position where you have to risk something that you shouldn't ever risk. Don't set yourself back weeks and months and years at a time just because you had a moment of you needed to feed your ego with a big bet. That's gambling.
Seems like there was a huge jump in your profit chart. What did you do differently from the before and after?
I refined. I had to decide that there was more, just like we were saying at the beginning of the video. It's more than just candlesticks. There's a why, and there are better whys than others. And I found the really good whys that I personally like to focus on, and then I found the best of those specific whys. You focus.
I would also say that your profit chart, it might jump very quickly just based on a hot sector or a hot play and capitalizing on it, but your profit chart is not all that you have. Remember, I make the analogy that you have two charts. You have a knowledge account too. So even if you're learning to lose very small over and over again and your overall profit chart isn't very encouraging, your knowledge account keeps growing dramatically. And when your knowledge account tips over, when you have so much knowledge, it spills into profits. So a lot of students have this kind of like quick jump in their profit chart, and it's like, what did you do? Like, did something change from one day to the next? But it's more of a gradual realization, gradual practicing, and it like adds up over time. So you can start getting closer and closer to having a profit, or getting closer and closer to consistent profits. And then, when the sector is right, when the chart is right, when the setup is right, when your preparation and knowledge base is right, it can all click. And obviously everybody wants everything to click all at once, but you can't predict when the next hot stock or sector is going to be. All you can do is prepare. And you're in full control of your preparation. And I'm sad to say that 90% of my traders and students are unprepared, even if the right sector, right play happens tomorrow. They don't have the right broker. They don't know the pattern well enough. They don't know how to position size. They don't know how to manage risk. So when there is no great play, you should be focusing on your preparation so that you can have everything possible in play, to give yourself the best odds when there is a good play. You agree with that?
I totally agree with that. It's just about focus and consistency and refinement, and it's a long journey. It's not a sprint, it's a marathon, like he always says.
And you'll be amazed, like when it all does click. Like you might not be perfect for a very long time, but there are brief instances where you're like, I just nailed that play. I recognized it. I bought it perfectly. I sold it perfectly. I had the perfect plan. I had the perfect position size, and you'll feel really good about it. And then it's not even just about the money. It's about, mastering this art, which is basically what this is. I get more satisfaction, like the fact I made, 400 today. He made like $3,000, but we both traded the meat of the move. I took profits pretty nicely. I called it nicely. He traded nicely, took the meat of the move. And you get a lot of satisfaction more than just the money. The money is nice. The money buys you things in real life and it changes your life. But the satisfaction of like mastering this feels pretty good. Do you agree with that?
Having a trade plan and watching it develop and work out exactly to a T, and you're like, holy crap, this shit really is predictable. It's the best feeling. And the worst feeling is when you go against your plan and you start doing things because you're completely emotionally driven, and that feels terrible. More than the loss, it's just the fact that you were so immature about it in the moment.
And if you do have an emotional loss, a lot of people are like, oh, this is so hard. I'm so sad. I'm thinking about giving up. But I'm like, why? If you break the rules and you lose big, that should give you, more confidence in the rules that you broke.
Yeah.
Like, I would be worried if you're following rules and you're losing big. But obviously, rule number 1 is cut losses quickly. So it's very tough to lose big if you're following the rules. It's very easy to lose big if you break the rules. And, like when I said, like my aha moment was when I lost big, that crystallized the rules for me. I'm never having another $500,000 loss. I never want to be put back into that situation.
For example, like I have a couple rules. One of them is don't short first green days. Another one is don't really long stocks. And so when I take my losses, it's generally first green days and long in a stock. And it's frustrating because why am I doing that in the first place? It's a simple rule and I shouldn't break it.
Let's see. On a morning spike pattern, how would you determine a safe entry point if the stock is trading at new highs with some overhead resistance, similar to those bad sushi? Do you wait for consolidation or do you dip buy? How do you determine safe entry point with good risk reward?
On a morning spike pattern, I think that comes down to waiting for the stock to be red on the day. It's kind of a confusing question for me because it's a little vague, but I want to wait for the stock to be on backside, a sign that, it's been extended and it's time for it to reverse and start doing the next round of downfall.
Well, you're looking at it as a short.
Yeah.
So I'm looking at it as a long, and I think the question was about long, like,
okay.
When it's holding near its highs, but there is overhead resistance, like how do you wait to dip buy? Or do you does it have to go red to green and then you buy? So he's looking at it as shorts where he's looking for, it frankly to fail at red to green. And if it fails at red to green, that gives him more confidence to short because then he's looking for the next leg down. For me, if I'm going to buy a stock that's holding near its highs, ideally there should be a catalyst. Ideally there's a lot of shorts. I want it to go red to green because then it proves that his thesis is wrong. If it fails at red to green, then his thesis is probably right and is probably going to head lower. But if it goes green and keeps going green, then the shorts are getting squeezed. Not all shorts are as patient as him, so they might not wait for red to green fail. They'll just be like, let me just short, and then that's how squeezes are started. Let's see. Guys, I noticed that when I win even once and certainly a few times in a row, it gets in my head, leads to changes in attitude. How do you deal with wins and not let them get to your head? It's a good question.
This is probably not something that everyone should do, but this is what I've done, and it's actually, I think, probably one of the reasons that my chart is very consistent, because that was an issue for me. Whether you make money consistently or you're losing a lot, that really starts to mess with you. It makes you hesitate. It makes you lose confidence. So what I did is I've completely hidden how much equity is in my account. I don't want to know what I did yesterday. I don't want to keep track of what I did a week ago. I don't want to keep track of what I'm up for the month. I don't want it in my head. I just want to come to the day, every day, go to work, and then close my laptop and do the rest of my life. I don't want to focus on what is arbitrarily just a number and it's going to change.
So that is the Tim Grittani approach. I wholeheartedly disagree with it because I am Jewish. It goes against every greedy bone in my body. I am genetically predisposed to be unable to do that. I can never hide my profit and loss. That's why I'm trading. But I will answer getting to your head. You really just have to think about this as one trade at a time. Like, I know we're looking for patterns all the time, but a lot of people see patterns like, 14 wins in a row, I'm on fire. And you're like, you kind of like want to pitch like this no-hitter, and then you start changing. Like if you look at like some of the pitchers, if you want to make a baseball analogy, they're taking a no-hitter in the 6th, 7th, 8th inning, and then they start thinking about it, and they want to preserve the no-hitter, and then they fuck it up in the 8th, 9th inning because they're different. If you just take it one trade at a time, it doesn't matter how many times you've won before. You want to keep winning, but understand that rule number one, again, this is another way where rule number one comes in handy. If you cut losses quickly, even if you lose, it's not going to be that bad. So if you look at like 13 trades in a row and then one loss, but your 13 trades should theoretically be a lot bigger than that one loss. So yes, you're not necessarily perfect anymore, but the small loss doesn't really change your overall profit and loss. And then, sometimes it's even good. Sometimes you might just want to take a small loss just so that you get that whole perfection mindset out of here. It's not about any one trade making you rich. It's not about any one streak. What can you do this week, this month, this year to put yourself in the best position to be rich 5, 10, 15, 20 years from now? And you're never going to have a perfect 5 or 10 or 15 year pattern, like where you're just winning all the time. That won't happen. That doesn't exist. Anybody who says does is fucking lying. You just have to try to win more than you lose and focus on your overall goals.
Just take it day by day, trade by trade, and don't let yourself get in your head. That's what I would say.
But at the same time, I understand, this stuff does get in your head, especially if you have losses. Here's my question. I'm going to add to that. What happens if you have several losses in a row? What do you do?
Figure out why I'm having the losses. Every loss, every mistake is a learning curve. there's something to be learned. And if something's happening consistently every time, then there's a variable that you need to figure out, and it's a chink in your armor, and you got to fix it.
It can be very disconcerting to have a lot of losses in a row. First, I would say trade smaller, okay? You don't go bigger. You don't be like, okay, I've had 8 losses in a row. Now let me go all in because I'm not going to have a loss on the 9th. Like there's something missing in your head. You have a wrong strategy, wrong thesis. And now your mindset is messed up. Like you kind of have to look at like all those losses as like, like you're in like a breakup and you have this messed up mindset where you're like, you're just gone through a breakup. You're not looking for like a wife or husband right away. Like, hey, I just broke up. Who wants to get married? You don't go all in on something when, your relationship. Like if you're breaking up, you're going to listen to like sad music. You go out with friends. You might like tear up some photos and stuff like that. Like you have to recognize that you have something majorly wrong going on and you have to try to fix that. So start trading with small positions, like cut them in half. Cut them by 3/4, maybe even go into paper trading just to fine tune. Like you got to go back to like training wheels.
Yeah, definitely cool down, take your foot off the pedal. And generally, a lot of the times that people have consecutive losses, it's market conditions are changing and you're not adapting to what's going on. So it's definitely a time to step back, take a breath, and figure out what's going on.
And you don't also have to always trade. Like some people are like, oh, I have 8 losses in a row. I know I have to just stop trading, but let me just do one more trade so I can like end this little mini break on a whim. And you want to like go out with a bang. Just like if you're down like 40 or 50% on a stock, I get people messaging me like, I'm down a lot. I broke rule number 1. Should I just wait for a little spike? And they wait weeks and months, missing out on opportunities, missing out on so much studying, just watching the stock, hoping, waiting. It's going to bounce. And then let's say it bounces 10% and you sell and you're like, I waited and at least I won a moral victory. No, you didn't. You fucking wasted money. You wasted time. There is no moral victory. You need to really get out of losing positions as soon as possible because they are cancerous. They're going to mess with your confidence. They're going to mess with your account. You're going to miss out on opportunities with other plays. So cut losses quickly. And if you have, 7, 8, 10, even 20 small losses, again, if you follow rule number 1, small losses might be annoying, but they're not going to kill your account. They're not going to kill your confidence, or they shouldn't. 20 big losses in a row, you probably won't even last. You'll probably have blown up after like 5 big losses.
Yeah, no one trade is ever worth it. The main goal is to live the trade another day.
You spoke at my conference last year and you're like, one of the goals was to get on stage. And we looked at your notebook and you're like, one of the goals is to get on stage, and then you're on stage. Just one little what can you tell people who are looking, they want to be the next student to make 200,000 plus? Like, what can you do to inspire them?
So one of the most surreal things ever was finding Tim Sykes 5 years ago and then being here in Santorini, trading with the most amazing view, eating the most amazing food. So definitely dream big, have goals.
And just recognizing that this is real. I can't tell you how many people, they're like, I didn't want to study, but then I saw somebody else do it and I saw them, actually like trading and I saw them succeeding. So that gave me confidence that I can do it. Trust me, this stuff is real if you take it seriously. I've been doing this 20 fucking years.
Yeah, keep a winning attitude, keep your head held high. Yeah, thank you. And yeah, just keep your head in the game. It's totally worth it. Whatever Sykes preaches about in terms of what it's really like to trade anywhere in the world and make all this money and live your own freedom and your own lifestyle is absolutely real, and it's been the most amazing experience of my life, and I couldn't be happier that I'm here.
Oh, thank you. And he is a future millionaire if he keeps this up. You know, $200,000 is nice, but it's better to be a millionaire. Let me just remind you, in case you're tuning in late in this video, where we are, because it looks like just a room, but it's not just a room. Look at this view. We are here in Santorini at pretty much one of the best suites on the entire island. And, you know, we can do this here. Like, some people, like, joke around. They're like, you're not really trading from these places. You're not really in the pool. Like, yeah, I am. Like, that's the cool thing with the technology. You have to recognize the opportunity that we have. Like, look at this. Most people here are just, you know, here on their anniversary or their birthday. I'm here, today's a Tuesday, because I want to be. And, you know, Huddy's here because it's the summer and he's traveling around. Like, it's not just about the money. It's the freedom. And that's what I need you to see, okay? Freedom. And that's the beauty of this. We're not working in these little, you know, offices. It's just cool in there and it's really hot outside. So it's important for you to see this, because I've now been to over 100 countries and I've been doing this now for 20 plus years, literally. Trading for 20 plus, teaching for 10 plus years. And it's inspiring for me to have students like Huddy and upcoming students. Thank you guys for all the questions. I just want you to study hard, and I want to change your life with these rules, with these patterns. It's not a perfect process. It's not going to be easy. You have to wait for the right setups. You have to find what setups work for you, and what setups work for you might be different than Huddy or different from Tim Grittani or different from me. We all have different personalities. But by sharing what has worked for us and sharing how we make these, you know, kind of excessive returns on small accounts, I think that's a very good thing. Oh, one last thing I just wanted to ask him before we go. I think this is going to be interesting to hear. I don't know what the answer is going to be. One last question. So when you first got started trading these penny stocks, and this applies to a lot of people, what did your family think? And how did you like keep up on it when, you know, probably I'm guessing they doubted?
Well, I was in school, so, you know, I was getting a double major, and they were just proud that I was working my ass off in school, and so I found the time to be able to do it from 6 to 8 a.m., and it didn't really affect anything that, you know, my parents were asking me to do, and I was still getting the 3.7 GPA double majoring, and so it gave me the freedom to say, hey, I found stock trading. I didn't necessarily tell them I was penny stock trading, but I said I found stock trading.
If you had said penny stock trading, what would they have said?
I don't know. Had a good conversation.
Like, what was that Matt Damon poker movie where he like keeps losing? It's like a bad poker player. I don't know. I'm sure I'm going to get a lot of comments on this, but like, that's the thing. Like, a lot of people, their friends and family are like against it. Like, oh, you found this thing, like it's just gambling, like it's probably like a scam. Like, how do I convince people to tell their parents and their family members who are concerned that this is not a scam, that it's not guaranteed, it's not easy, but at the same time, like, it is worth learning. Like, it's a skill that's learnable.
I mean, definitely in the beginning, it's a little bit that you're a degenerative gambler. And then as you focus on Tim Sykes and allow him to teach you, you start to grow and refine. And it turns more into this game of candlestick charting. It turns into a game of psychology, of reading 10Ks, of looking through balance sheets, of just, you start to immerse yourself, and it's no longer just penny stocks. It's this whole new attitude and lifestyle, and it really just builds a lifestyle. It builds a career path for you to capitalize on.
And that's what you have to look at this as. This is a business. Like, this is not like a little game of like Dungeons and Dragons or Fortnite. There are subtleties and nuances to this game. And like, when you read the 10Ks and when you look through the charts, you can start to find the angles. You can start to find the opportunities. And they might not be apparent when you first begin, because you're just like, oh, let me just buy any good company or buy any hot stock. You'll start to see that's not the way forward. You know, most people who follow chat rooms and alerts from others, like, they're not going to get rich because they're not learning to think by themselves. Like, I encourage you, and I think Huddy encourages you, to learn how this game works. Like, learn what indicators matter, what resources matter, what patterns are good and bad, what are traps. When he says like the discipline, it's frankly you versus you. It's not you versus the market anymore. Like once you learn enough, you just have to have the discipline to focus on the right patterns, to focus on what works best for you, to cut losses quickly. And then it's you versus you. If you're losing big, you're breaking rule number 1. If you're chasing stocks, you're breaking rules. So learn the rules and then, figure it out. But if somebody doubts you, it's seriously natural. Like we're trading penny stocks here. The whole world hates on it. I'm used to it. Tell them to watch my 1,000+ free, YouTube videos. Huddy's real. His hair is real. This is not a wig. This is crazy.
Okay. No more coffee.
I mean, you gave me coffee. We had to do this video. So we just want to show you what this is and what it's not. A lot of people think this is going to be easier than it is. They think, oh, Tim, I want to be your next millionaire student. But they don't really put in the time. They don't really recognize that this is going to be a multi-year thing, learning-wise. Like you understand that this is a marathon, not a sprint, and that has helped you. Like when you first started, did you have like a multi-year time horizon, like learning this?
Absolutely. My sophomore year, I knew that by the end of my senior year, I had 2.5 years to at least say that I could make a profit. And if I didn't make that profit, that's why I had the double major, just for something in my back pocket. And thankfully, it was at the end of like 6 months of my senior year, that's when I started reaching consistency. That's when I started buckling down and saying, holy shit, I'm running out of time. It's been 2.5 years and I'm still not profitable. But I knew that I was on the cusp. I knew I'd been watching it long enough to realize that, okay, this is realistic. It's an obtainable thing.
And that's the thing. It's not just about your overall profits. It's can you get to that cusp? Can you get to that point where you have studied enough and you feel comfortable? And yes, sometimes you have to learn to lose. Like how many times did you lose before you got to that consistency?
And I can't even count how many. It's crazy.
Correct. Hundreds of times. So some of you guys think you're going to find consistency after losing, like, oh, I've lost 10 times. I know how bad it is. You don't know shit. You don't know fucking shit if you lose 10 times. Okay? You think you do. You think you've seen the worst. You haven't. You need to see and experience how bad it feels to lose, and you need to learn how to control that because the losses can be controlled. Sometimes I get it. You might be in a position, the stock gets halted, something out of your control, like even rule number 1, cutting losses quickly, it won't protect you. Sometimes that does happen, but that's very few and far between. The majority of the time, if you have a big loss, it could have been prevented. It could have been controlled. It could have been minimized. You did not have the right mindset. You did not have the right discipline. And again, that's you versus you. You failed. You lost in that battle. So you have to get to a point where it's you versus you and you're winning. You have the gambler like on your left side. You have like the little angel on the right side. And you keep listening to the angel, not the gambler / devil. Like that's how you have to look at this because there is temptation. The fact that you made $3,000 today and he closed his laptop. Why'd you close your laptop after making $3,000 today?
I don't want to be tempted to trade anything else. I made my daily goal. I don't need any more money. Even if there is a play, which there is, I don't want to trade it. That's
discipline. Discipline over greed. And that is something that you must understand. So again, thank you for watching. If you watched this whole thing, thank you, Huddy, for being such a great student and being so disciplined. And really, I'm excited to see what you do in the next few years. You've gone through the hardest part. That's the thing. It's always the hardest in the beginning. Okay, when you don't know what's going on, you're just looking at plays, they're moving so fast. The chat room, they're throwing out hundreds of tickers. You see like a millionaire student every now and then, but then you see like lots of losers. You don't know what to do. It's fine. It's confusing in the beginning. Once you start to take a breath, trade small, stay in the game, have the marathon, not a sprint mentality, and over several years, it gets easier, and then consistency.
Yeah, and stay positive and keep your head in the game. Keep your game face on at all times. But more importantly, stay positive. Don't let those emotions start bringing you down and start doubting yourself.
That's the worst thing. Like if you start losing, you start breaking rules, you take yourself out of the game, there's no way to get back. Okay, like the key is staying in the game. Even if you have a small account, even if you're paper trading, at least just watch and learn, see these trends, and that way you can start to say, oh, wait a minute, there's a hot sector that's heating up. We've had, I don't know, how many hot sectors would you say you've had in the past few years? A dozen?
There's been not 4 or 5, like really hot sectors.
Yeah.
4, 5, 6, 7, yeah.
Yeah, so roughly like 1 or 2 a year, that's it. and you need to recognize that they're not going to be always a hot sector. There's not always going to be a hot stock. You just need to be watching. Even if you're in beautiful places like Santorini, even if you're in college, just watch and try to spot some potential plays. If there's no potential plays, do nothing. Discipline. Sometimes the best trade is no trade. Anyways, we got to go. Leave comments below. Ask questions below. Thank you again. Congratulations, buddy.
Thanks, you too.
Who's next? Who wants it? Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.